Hello, folks. It's another Sunday. Welcome. Thank you for showing up. What we are here for today is to talk about this week's, this is our free newsletter. It's the Market Pulse newsletter. I produce it every weekend. And we start with just a random chart. And I focus on charts of stocks that are moving during the week, doing something interesting from an Andrews pitchfork perspective. And so, anyway, this week that chart is Halliburton. Got a couple other bonus charts for you, and that's why we're here today. Let's just jump right into the charts. And here is the S&P 500. And so what I notice for this week's action is that on Tuesday the markets they gapped up. It's not obvious on this chart. We can expand it. There you go. So you can see that on Tuesday morning the equity markets gapped up. And then they continued. You might say that was mostly sideways action, but notice that it's uptrending action, and more importantly, this uptrending action has pushed through, or appears to have pushed through, these resistance levels. And so if price is truly pushing above the median line of this blue Andrews pitchfork, then our next price target becomes the upper median line up here in the 3,900 to 4,000 range. And of course, from where we're at right now, that's 300 points, or a 10% rally. And so 10% rally is nothing to sneeze at. And in particular, we're sitting here, it's for December. Not uncommon that we would get a year-end rally, and so 10%, that's a lot of rally to expect Santa Claus to bring, but the setup's there. And so let's continue. And here with similar thing in the Dow, where we've got price pushing up through some resistance during the week, and then significantly on Friday pushing up through this horizontal resistance level. Next target becomes the median line of this blue Andrews pitchfork. I think in the Dow it's only that's 4%. What do we got? 327. It's about 500 points, but so anyway, 10% in the SPX, 4% in the Dow. Here's the Nasdaq. And so the Nasdaq has been, it's not quite as overbought as the other indexes. What's interesting to me in this daily chart of Nasdaq is that price Thursday and Friday pushed above this resistance zone, and let's remember that resistance and support, it shows up in zones, not in discrete little black lines that we draw on our charts. And so this is a perfect example of how there's any number of different locations where you could draw a trend line, or in this case it would be a horizontal support resistance line. Any number of choices in that area where you would draw it. But if we think of it as just a support and resistance zone, and we can visualize it as a rectangle in this case, we can see that regardless of where you want to draw your line, price has pushed above that resistance level and is now doing something new. And so in this case, in the NASDAQ, our next price target becomes the upper median line extension of this modified shift pitchfork. So, and then in MACD, so now MACD is an unbounded indicator. And so MACD can go as high as it wants. Currently we're in the, 200, 300 range. If it wants to go up to 800, 900, nothing to stop that from happening. But what we see, a tendency that you can notice in the charts if you're paying attention, is that prior highs and lows in MACD tend to act as resistance or support levels. And so in the case of this chart, what we can glean from MACD is that relative to this prior MACD high, we've still got room to run. And so that's all I'm showing there. And then, of course, energy, as indicated by stochastics, is very elevated. So we got lots of energy. If price wants to do a year-end rally, there's lots of energy to do so. Unfortunately for the U.S. dollar, that energy is working in the wrong direction. And so here in the U.S. dollar, our next price target becomes the lower median line of this shift pitchfork. Significant this week, price has been bumping along the support level, excuse me, and then had dropped below, but then in the past week has made a significant, has truly given up on that support level and dropped significantly below. Next price target, bottom lower median line extension. There is, if we go back all the way to 2018, there is some prior lows where we might look for some support, but again, they're 2 years old at this point, so who knows? And see, as early as right there, let's throw a horizontal line in there just for fun. So potentially we're coming into an area where we may see some support, and so I'd probably do that. Oh, and so while we're here, this is a good case of when I'm drawing support and resistance lines, what I look for is where support has become resistance or resistance has become support. And so in this case, we can see that price is trending downward. We close above this level, and then the next day, the next session, we're below the level and never manage to rise back above. Price drops off from there. We get a retest of that level and then drop off. Another retest, we drop off. We finally break above. And so that's the kind of action that I look for when I'm drawing or looking for support resistance levels. And so what we want to demonstrate here is that we could be coming into a support resistance level provided by this price action back in 2018, but that remains to be determined. What we want to focus on for now is that the U.S. dollar is exhibiting very weak behavior, and our next price target is below 90 at this point. MACD obviously on a sell signal in bear mode. Stochastics energy is extremely low. Let's continue. Gold in the past week, finished its completed a retest of the 200 moving day average and has rebounded fairly strongly from that level and is now pushing higher against this resistance level at 1850 and the 20-day moving average. And so we can see, 1850 was a pretty strong support level, and so not surprising that as we deal with 1850 as resistance, that's going to take some work. And so some more sideways action in gold wouldn't be surprising. On a positive note, the positive note is that price has rebounded strongly off the 200 moving day average. We also have a new buy signal in MACD. Energy is fairly elevated, but obviously we're dealing with resistance at this point. Let's zoom out because I want to make sure we are all aware of. Let me just clear this chart. The last time that price in gold tested the 200 moving day average, we subsequently got a $600 rally. And so, history doesn't have to repeat, but just be aware that the last time this happened, this is March of 20, we got a $600 rally in gold. And so potential at this point for another $600 rally in gold, which gives us a target of 2,400 or so. Let's move on to silver. Silver's been, just kind of bumping sideways. Has yet to revisit the 200-day moving average in this correction, which, take it for what it's worth. Is that a sign of strength? Silver is stronger than gold at this point. The fact that gold is acting like it has bottomed suggests that silver is not going to visit the 200-day moving average in this correction. And of course, nothing says that it has to. And again, if we look at MACD, we've got a fresh buy signal. Price has regained in this last week. So tested 2240 as support, clearly closing above it. Big positive move. That's Tuesday. And now price bumping kind of sideways, but doing so along and then above the 20 and 50-day moving averages, and this is the lower median line extension of this blue Andrews pitchfork. And so that's silver. The mining stocks, so again, we've got this, I want to call it bottoming action. We don't know that this is actually a tradable bottom, but this is certainly bottoming action along the 200-day moving average. And of course, the median line, second median line extension of that blue Andrews pitchfork. And so anyway, we get this bottoming action, and then price gaps higher. This is Tuesday morning, so we get a price gap higher Tuesday. Price runs into resistance at the 20-day moving average, kind of bumps sideways for the rest of the week. Positive note, obviously, it's positive note that we get this gap higher off the 200-day moving average, and then we get a new buy signal in MACD. Gaps are an exhibition of energy being released. So if you want to think about price from a physics perspective, we can talk about energy in relation to price. And so here in a downtrend, we would call this an exhaustion gap. Sellers are becoming exhausted. They're capitulating. They're saying, "Just get me out. I don't care what price I don't care what price it happens at. I just want out." And of course, this is a capitulation gap or an exhaustion gap, into a bottom, and then, you know, price rising highs are higher, and now we get a gap. This is, you could call it a runaway gap anyway. It's a bullish gap as price moves higher, and in this case, gaps over a resistance level, the median line of this Andrews pitchfork. And so enough about energy. So anyway, the mining stocks are looking pretty good. Some positive action, of course, technically still in a downtrend. This is Brent Crude. It's acting like it wants to push higher. We're up at the $50 level, so round number resistance at 50 appears to be stopping any upward action for now, but that looks like a market that wants to go higher. Of course, price is overbought relative to the moving averages. The moving averages are overbought relative to one another. And so momentum has slowed down, MACD moving sideways. So it would be interesting to watch this. Breakout traders might be planning a strategy if price is able to break above 50. And we shouldn't be surprised to see a pullback from here, or just sideways waffling for the next couple of trading sessions. Here's the interest rates. Interest rates trying to move higher. I mean, you know, clearly that's what we saw this week. Interest rates trying to move higher, and let's keep in mind, we zoom out to a bigger picture here. This is when the 50-day moving average dropped below the 200-day moving average. That was back in January of 2019. And so the fact that we now have the 50-day moving average, that's the red, moving above the 200-day moving average, that's non-trivial price action, in my opinion. Interest rates are really trying to move higher here. And so anyway, that's something we want to pay attention to. I was about to say that's all I got for you, but we do have some bonus charts. One of the U.S. indexes that made a new high this week, the Russell 2000, MACD super overbought, energy very elevated, target up here at the upper median line of the Andrews pitchfork. I was just having fun Sunday morning, you know. I'm doing this for free. Ryan's going to have some fun. Yeah, that's a very high energy. That's an impulsive breakout higher. Very, very high energy move there in the Russell. Halliburton, that's on the cover of the newsletter this week. So we've got this price target. We've got this open gap giving us a price target at 21. Happens to be coincident with the upper median line of this modified shift pitchfork. We've got another price target potentially up here at 25. If price gets really excited moving into the end of the year, that target might come into play, but we'll just have to see. Obviously, we're on a buy signal in MACD, and we just got an upturn on, you know, the end of the week last week. So one more chart, and then we will be done. This is Bank of America, and so potentially we've got a breakout on Friday above this prior high. And so MACD moving sideways, but still on a buy signal. Energy is elevated, potential breakout. And then our price target in this case, we have this open gap at 34. And it coincides with a horizontal support resistance level that you can see here. Median line of this blue modified shift pitchfork, and so just the potential there for a setup to trade into 34 as target, and potentially by year end. Just depends on what kind of rally we get into the end of the year. And folks, we're at 20 minutes. Bye.